All right, let's dive into a real head-scratcher from GE Aerospace's latest earnings. On paper, everything looked fantastic, but the stock, well, it took a serious nosedive. We're going to get to the bottom of exactly what happened. So here's the central puzzle, right? GE Aerospace absolutely crushed it. They beat expectations on revenue, they beat expectations on profit, but what was the reward? The market turned around and punished the stock with a massive sell-off, and on huge trading volume too. It's a disconnect that, just doesn't seem to make sense at first glance. So what gives? What did the market see? Because Wall Street is always looking ahead. It clearly sniffed out something in the fine print that it did not like. Let's dig in and find out exactly what was hiding in those details. But first, before we get to the bad stuff, let's just take a moment to appreciate how good this past quarter really was. I mean, looking back, these results were impressive by just about any standard. This looked like a company firing on all cylinders. Okay, the big one everyone watches, adjusted earnings per share. It came in at $1.57. Now that flew right past Wall Street's guess by a solid 13 cents. And get this, that's a 19% jump from the year before. A really strong result. And it wasn't just the profit. Their total sales, their revenue, was just as strong. They pulled in $12.7 billion, which was $700 million more than anyone was expecting. We're talking an 18% increase year over year. That tells you demand for their stuff is just incredibly high right now. And then there's this number. Look at that. The order backlog is a staggering $190 billion. Billion with a B. That's a massive pipeline of guaranteed business already lined up, which is just a fantastic sign for their long-term health. And management, they were feeling pretty good about it too. They were talking up their flight deck operating system, basically saying, hey, we've got this under control, we can deliver on all these orders. So up to this point, literally everything looks golden. So if the past was so great, the problem has to be about the future, right? So now we turn to their guidance, their forecast for the year ahead. And this is where we find the clues that really sent a chill down investor spines. Okay, here it is, the company's official forecast. And you'll notice the profit and cash flow numbers, they look great. But the number that caused all the drama is sitting right there at the top, that forecast for revenue growth. That's the one we've got to zero in on. And there it is. That's the smoking gun. After growing sales by a whopping 18%, the company is now guiding to low double-digit growth. That signals a major slowdown. You see, for a stock that was priced for growth to keep getting faster, not slower, this was a huge red flag. And once you see that number, the market's reaction, well, it suddenly makes perfect sense. Investors weren't trading on how good the last 3 months were. They were hitting the sell button based on this new, much slower growth story for the future. And boy, did they act with conviction. I mean, look at this. Trading volume exploded to nearly 14 million shares. That's more than 3 times the normal daily average. This wasn't just some nervous selling. This was a decisive, coordinated rush for the exits. The final damage for the day was a painful 7.39% drop. So here's the big takeaway. A fantastic quarter was completely overshadowed and, frankly, erased by a weak forecast. And that forced a major reset of the stock's price, all in a single day. So you put all the pieces together. Great execution, that monster backlog. But now, slowing growth. What does it all mean for the stock going forward? Well, here's our take on it. Looking ahead, we think the numbers are going to follow this new, more cautious script. You'll still see strong cash coming in the door, but sales growth is going to be stuck in that lower gear. This creates a real tug-of-war for the stock, right? The bulls are going to point to all that cash, while the bears are going to scream about slowing growth. We think this battle keeps the stock trading sideways for a while, so we're slapping a market perform rating on it. And remember, this is not financial advice.